Okay, guys, welcome back to another episode. We still didn't decide a name on the podcast, but here we are for episode number 2. I think last time we didn't cover that many questions from the Q&A. I think we did
2 of them.
only 2 from an hour and a half. So today we'll just keep going through the questions we had in mind. We did put another Q&A box up and we got a lot more questions. So I think we'll try and do in-depth in some of them and some of them we'll try and quick fire answer. But yeah, hopefully you've been enjoying the first one and we kind of want to make this more regular and more consistent and maybe bring different people on. But yeah, just spend some time to develop some thoughts we have and kind of interact with you guys and see what you guys want to hear from us. And we definitely want to keep this primarily trading related. But again, talking about other topics pertaining to life is always fun.
The questions that are coming in are pretty interesting, being completely honest. And the good thing is they help us with those questions to develop into, the last episode was 2 questions and we developed for, I think, an hour.
We go into tangents, we develop the thoughts,
So the better your questions, the better will be the podcast. So we got, I think, a very good question for today too. It's from Ray Jacques, and the question is basically was not a complete question, but it was more like a topic. It says confidence when trading.
Okay.
So if you want to start, Waka, what do you think about confidence when trading?
Okay, this is actually, it's not a question, but something you can develop a lot.
Yeah.
And confidence, if you were to look into the word, what is confidence? What does that mean to someone? Or what is a confidence person? Is somebody who basically has experience. And therefore, for example, if you're unconfident going into a speech versus another speech you are confident, at that point, it's nothing to do with your character, it's to do with preparation. Or unfamiliar territory, you're going to be unconfident because you are in a form unprepared or you have an unknown. And I think obviously he's referring to trading and the confidence that comes within that. So I think the simple answer to that is, if we were to do it in one word, is experience. You know, how much time you spent on the charts, how much time you spent in real market conditions and also backtesting conditions so that you've seen the same thing again and again.
100%. And there's something that I really like when we do the bootcamps that you mentioned. So if you want to cover a bit of that topic, because I think it's very interesting.
Okay. Yeah. So a point I like to develop in the bootcamps is the idea of stages in your journey, and using the analogy of myself in my dental degree of that, when you're going through the 5-6 years of training, first of all, you start at one point before you get to even touch a patient. So actually the first 3 years are divided into theoretical. So you're right in the beginning, you're doing general sciences, as if you're a medical student. You're learning about the liver, you're learning about the stomach, digestive, respiratory, you're learning about everything.
Theory.
Concepts, but first of all, very general. So in trading, let's say you're doing baby pips, you're doing retail, you're getting the lingo, you're getting the terminology. But me studying the respiratory system has no direct impact on me knowing about dentistry. But it's about knowing the parameters of what is the human body. So in trading, again, you need to have that first foundation. And then as you go through the years, then you start to focus on teeth, on dentistry, on the gums, on the bone, on the musculature, the nerves, the blood vessels, all of these kind of things. But what is it? Focusing on the region now. So that can be now you've gone away from baby pips and retail, and now you're going to more specific in, let me find a strategy and get more precision within that. Okay, now you're still doing theory. And then later on, you get to work with your hands. Now you're practicing in the labs. You're practicing with these phantom heads, these fake heads where you have practice teeth. And what you did in theory, you're now trying to apply, but again, with a teacher watching you and not a real person.
That'll be like a demo account.
It's a demo account and backtesting. Exactly. You're not actually causing any harm. If you cut someone's lip in the phantom head, it's not going to hurt anyone. There's no repercussion. So if you put 1,000 lots and take a loss on a demo account, no one cares.
Same thing.
But again, if you do that in a real patient or in real life, it's an issue. So that's the next stage of the journey, which is now you're going to practice in a lab and you're starting to work with your hands. So that's after 3 years, you still haven't touched a patient. You're still preparing. And then after that, that's when you're going to go into and now finally touch a patient and start to, again, with someone washing over your shoulder, each step you take before you even put an injection, you're getting, am I doing it right? Have I got the angle correct? And then, then you can go. And then you slowly develop your freedom and now you can do the injection yourself. And then you just have to call the professor every 20 minutes just to check everything's in order. But just goes to show the journey of, let's say, a student in a medical career. You start off very, very basic and you develop through theory and then you get practical and then you touch a patient and actually do the real thing. So now in trading, if you have to look at it like that, again, we're an industry that is the hardest one in the world, potentially. 90% of people lose. You could do something consistently for 5 years and make losses for 5 years. There's not many industries like that where you can put your full effort and consistently lose. So in that sense, the odds are against us. We're in a very hard industry, and people lack the respect for the journey. People lack the respect for the industry and how actually hard it is. And because it has such a low barrier to entry, you can open a demo account or a live account with $100 within 5 minutes. There's no real checks. There's no qualifications you need. You just open it. In fact, you're very encouraged to do it because they give you offers and whatever. So when there's no barrier to entry, and people are jumping into trading and they think, okay, I have access to the market, so I'm allowed to trade. I did a bit of basic training online from free resources, whatever. No wonder people will take losses. It's actually no surprise. It's like a first year dental student going into the clinic and trying to do a treatment. It's going to go wrong.
Yeah.
And I think people need to really get the respect for the markets that is due and say, okay, the odds are against me. This is a multi-year process. I have stages in my journey and I need to take it step by step. And that's kind of the analogy I give in the bootcamp of how you would give respect to any traditional education. You have to give it to your same in your trading career.
Same thing. I think accessibility to the markets in this case is what gives that sort of illusion. Maybe due to social media, maybe like I'm watching the incorrect person. Like I'm speaking about my journey when I started. So that makes people jump into the markets very early, trying to get results very quick. So I think coming into the market the first time, or if you can actually listen to this podcast on your first 6-month journey, first year journey, you can realize that having that mindset of let me take this very serious, like we were mentioning, right? 1 year process, 2 year process, demo account, testing.
I mean, the key you said is you have to realize it's not a get rich quick scheme.
Exactly.
And once you remove that element and actually even think like this is, I mean, we spoke in the last episode, I was doing demo for a year, again, through circumstance, not choice, but it worked in my favor. And I think if everybody has the mindset of every time we post on Instagram, we have this phrase of analyst before trader.
Yeah.
And if you really think like that, I'm not a trader. I'm not here to make money yet. But I want to be an analyst. I want to be a competent analyst. The money will come. First one, you organize the skill set. Then rooting back to confidence in the question, in outcomes, let's say you've done that journey correctly where you're 2 or 3 years in and you still haven't made money, but you haven't been in a rush. Again, I don't know why people come into this thinking this is what is going to solve their life. If you are to look at it from a realistic perspective, if you have $100 in your bank account and not too much to spend, trading probably isn't for you. You have to think of it more as this is more investing. And therefore you should have capital already or have a significant amount to either invest in your education or maybe use prop firms, whatever it may be. But it is not a means necessarily to make wealth, or it shouldn't be your intentions coming in. It's something you need a bit more drive and passion for because of how difficult it can be. But coming back to the confidence side, let's say you're 2 years into your journey, you've only been doing a demo account, you've built a journal of more than 1,000 trades, you've journaled live trades and backtested, and you're studying someone's charts. Now you're going to be in such better position when you finally come and let's say do your first live account, because you've seen certain things play out 1,000 times. And therefore, it should be just another day in the office. And that's kind of what true confidence should be within the trading realm.
Yeah, and there's also two sides. I think that a lot of people put a lot of the weight into psychology when it comes into the confidence, and as better you in psychology, better trader you will be. And at least I think for ourselves, and I can speak for both, it didn't work in that side. I think for us is as we were getting more competent and we were doing better as a technical trader, our confidence started to boost in that sense. So we started to get a bit better in the psychology side. And then another thing, no matter what you do in life, you're never going to have the same confidence on your first year that when you are 5 years deep, that when you are 8 years deep.
So, yeah.
Because if you're doing and putting the consistent hours, you're actually building that skill set up. After 8 years, you cannot compare from a 1 year experience.
But another thing that you have to actually remember is confidence is fickle and fleeting. And it's not something you either have or don't have. It's not binary. It's something that is developed and grows and is comes and goes. For example, myself, when I had my finals in July, I didn't actually trade for a month. And then when I came back in August, again, I wasn't full in because it was more like I've just graduated after years of studying. Let me have a summer to myself. So I was casually trading or looking at the markets every day, but not as active as I am now. And I felt rusty. And did my technicals change? No. Did my knowledge suddenly disappear? No. Everything was actually the same. In fact, I'd been on a trajectory of peaking, but I felt rusty. And I don't know why. And that's because not necessarily it's the repetition or things in my mind. It's also the confidence or belief you have in yourself, which comes and goes. And right now, both of us were in a position over the last, let's say, 6-7 weeks where we've been, I think, in such a good flow right now. We have our routine. We're looking at the markets every single day. We're journaling things, taking trades basically every single day, and things are just clicking. And it just, I was saying to you yesterday, I was like, sometimes it feels effortless. And I'm like, why couldn't I do this in August? And I think that is part of it, is through constant being involved with it and immersing yourself in the thing that you're trying to master. And that's part of it. And actually, one thing you said, which reminded me of another question I saw, it was from Bava 00. How to avoid worst entries as a beginner? Need some help on psychology. I noticed the question, right?
Yeah.
He's saying, I have problems with entries, which is a technical thing. So can you give me advice on psychology? That doesn't align.
Precision will help you, I think, with psychology, because at least I remember back in the days, one of my problems with psychology was, for example, that I used to trade daily and H4, not going down into, let's say, M15, M5, lower time frame analysis. So my problem is that I will used to trade certain patterns that for it the trade to play, it was taking maybe like a week, or maybe
50
like
pip stop loss gang and all.
Exactly.
Back in the day.
50 pips maybe was kind
30.
of 3 days that the market will be going down in profit,
consolidating around
consolidating around break-even area. So that becomes very stressful. And I understand the psychology part, if maybe he's asking in that sense, because that also popped in my mind that it used to happen to me. So
I think you're like a 1-to-1, and then next day you're back at your entry and it's playing around. Maybe you exit and then it melts and then it goes to a 1-to-3. Okay, that's an interesting one. But what I would more say to that is, generally speaking about psychology, is that there's a notion around, and I don't know where it comes from, and a lot of people stick by it and believe it, especially some big names in the industry, that trading is 90% psychology. And I'm not in disagreement with that completely, but I'm in disagreement in the notion that it is, you divide your trading ability of psychology and technicals. I think it's foundationary technicals and later psychology. They are both important, but you cannot have psychology without technicals. They're fully dependent. And in that sense, you can have the best psychology in the world, go through mastermind training and have a coach and all of this and that. But if your technicals are not sound, I feel it's actually worsening your situation, because you're trying to build good beliefs and good psychology on a fundamentally flawed technical system that you haven't developed.
Yeah, imagine you have, for example, a 1-to-1 strategy or 1-to-2 strategy trading from an H4 time frame analysis.
I mean, that's fine, assuming your win rate isn't good.
Yeah,
if you have a 90% win rate,
bouncing in the, then maybe your psychology has to be very good, because you're going through maybe rough phases. But once you start putting in yourself into a better risk to reward, then you can work on psychology. So as you mentioned, I think it's pretty important.
Yeah, I mean, I think right now in our trading way is that we very quickly know. I mean, it depends. Some of us are more market execution. For example, Raim, he's a more market execution style. I'm a very put a buy or sell limit, have my stop loss in place, and kind of let the market do its thing. Have my break even protocol, and then let the market do its thing. Either I hit break even or stop loss, or go to my targets. And the benefit is, because our stop losses are 5 pips and less, 5 to 3 pips is our normal range. Yes, the 2 pips is getting, maybe inflated. If it's getting to 6 pips, look for a better entry. So when you're at a 2 to 5 pip range stop loss, price is not going to hang around there for a day. You're going to know very quickly if you caught the right move or you misread the market. And in that sense, it doesn't leave too much room for psychology within the trade, but it can lead to psychology problems if you, within a space of 30 minutes, you took a loss because you didn't know what you were doing, and you didn't read the technicals correctly. And then you could be like, man, I'm 3 losses in and I'm still in London session. Whereas the let's say the retail trader, those 3 losses might be in a week. And therefore the blows are in a different way. But I think overall, you summed it correctly, is that once you build your experience, once you have good technicals, once you have backtested, and I say this to the community all the time, backtest the last month of EU and GU. Make sure that's something you're maintaining, so that you've got at least a 1-year backtest journal of 2 pairs that you've watched every single candle and marked everything out. Now, if you've done that system and overall, if I do it in hindsight in a backtesting manner, I know my strategy. Again, you have to be very strict in your parameters, not cheating it to get a win rate or something, but very objective, very within the strategy. You build a journal of 1 year on 2 pairs. Now you know that, okay, overall, at the end of each month, I've been up in a backtesting hindsight scenario. So I know that if I execute the plan correctly in the live markets, I know I'm going to be up. For the last year, it's been up, and now it's just dependent on me. because the technicals will allow me to be up every single month. So in that sense, if you have the belief within that I know if I execute correctly, it's going to work, then it's just coming to you day to day and saying, okay, am I doing everything correctly? And then that just becomes a checklist. It becomes, what are my confluences? What is my hierarchy of confluences? And am I trading in a correct way or gambling? And that with time kind of secures itself. And I think both of us reached a point where psychology is not something we've had to address. It's never I've sat down and think, man, my trading's fine, but my psychology is an issue. I think it takes care of itself once you follow the journey and your technicals are sound. Psychology kind of falls into place, and maybe there's certain things you need to tweak, but
yeah. And there's a couple of things too we can mention. I mean, when it comes to psychology, you can always improve it. There's ways to it.
In that sense, what do you feel would be your weaknesses right now in your psychology, if you feel like you have something major?
It's more about a journey process. So for example, when I started, the thing is like I started very soon. The same way I started technical analysis, I started more into the personal development route. So start reading books, things like this. So I think my psychology was built upon with my technicals. So in that sense, I think I'm at a very good point right now. Of course, always room for improvement. But in that side, I mean, for people starting or people that are kind of struggling with this, I don't think they need also like psychology books of trading itself. I don't think they're that useful. Maybe read one or two that they are known, but maybe just read business books, books that maybe grow your mindset in general, because that will also make you understand how people invest their money, how
I think what you're more alluding to is expanding your horizons, and kind of developing your character to have a bit more resilience and understanding how the world works. I think that's on a very peripheral level. But when it comes to what you can actually do in the day-to-day, of, okay, I'm feeling, I have a lot of emotion on this day, or man, I've taken 2 losses in a row now, I feel it, I'm charged or something. And you can be as sound as you want in your technicals and your plan and your journal, but no one's immune to emotion. And again, part of it is, okay, are you doing risk management? And that's systems. I know that, okay, I can afford, for example, myself, I do 0.2% risk. So I know that even if I have a terrible day and take 3 losses in a row, I'm not even 1% down. So my disaster days are controlled. But again, regardless, you're going to have emotions. And I think with that, it comes to like a mind of an athlete and I'm sure you know yourself when you're on a pitch. And again, I think in football, it's a very charged scenario where it's 11 and 11 boys kind of swearing at each other, egos involved, testosterone involved, people fueled up, and people are trying to get their egos in the way, trying to belittle the other person, trying to, in what's the word? Overpower another person, whatever it may be. So there's a lot of emotions involved. Or you have a penalty kick in training, you can get that in with your eyes closed. But suddenly in the finals, people can't do it, and that's the pressure element. So I think in that sense, from a student perspective, from an athlete perspective, maybe you have some kind of tricks you use, or let's say a meditative form that you have. Do you have any thoughts on that?
Yeah, I personally have a very disciplined routine in that sense. Basically, back in the day as a student was one that I already explained in a YouTube video. Maybe we can tap again in another video. But right now, more than as a full-time trader, I like to have my day very organized. So no matter what happens in London, I know the next thing I'm doing, I'm not going to stay at home or whatever, because next hour I'm going to the gym. I go to the gym, I exercise, I run, I just build up my muscles or whatever. and then after that, I like to go back, I cook my diet, and then I just eat, and then I go into New York. Same thing after New York. No matter what happens in New York, lose or win, I'm going to journal that. So also my mindset is been always kind of like long term. Okay, I want to always focus that if I have 2 losses today and I journal them, I know in 3 years I'm going to be better. I know in the next year I will be better. So it's just a matter of doing certain things on a daily basis. There are always systems in process that are going to help you grow, not the next day, but in 6 months. And not in 6 months, but in a year. And you're always going to be 1% better every day. And that keeps your momentum up. And it compounds.
I'm going to give a nugget from the bootcamp. This is something I say and a lot in community calls. There's a few things I feel like I say, and I say it every time, because I think the repetition is important. And it comes to the idea of celebrating the process, not the outcome. I think this is actually a key one, because the process is within your control. The outcome is not. And in that sense, if you are to now be attached to outcome, therefore you're going to have direct emotional response to something that is out of your control. That win or loss you can't do anything about it. You can have your analysis, you can have beliefs, you can have something in place, but the market is going to do its thing irrespective of your feelings. And therefore, if you are attached to, okay, I'm happy because I won, or I'm pissed off because I lost, therefore you're emotionally reacting to scenarios out of your control. However, if you are to now take it a level back and say, I'm going to be enjoying and praising myself on the execution of the plan and process, and that is in my control. And irrespective of outcome, I'm rewarding myself of, okay, if I took a good trade, sorry, if I won a trade and it was a bad trade, let's say I just entered because I felt like it, or the market was flying, so let me jump into a buy,
Yeah.
and then it actually
That played out.
and it played out.
Yeah.
And then you could say, okay, I won a trade, excellent. But there's no longevity in that. That's actually probably conducive to taking losses and probably going to affect your win rate, because you're entering things into your system that are random and that are not planned. And therefore, if you start to celebrate wins that are not part of your plan, you're actually inhibiting progress. In that sense, you should be rewarding yourself on the process. And if it's a trade you took that you were not supposed to take and it's a win, you shouldn't be happy. And vice versa. If you took, let's say, a good trade from your analysis, everything lined up, it was a trade 10 out of 10 times you should take, and in this occasion it was a loss, you celebrate. You say, okay, I executed the plan. In this time it was a loss, but this is something I factored in with my technicals and with my risk management. This is part of the process. So I think that's a key one as well, being free from outcome, attached to the process. I think that's a key one too.
Perfect. And this leads us to the next question. The question was from Nafi. Okay, and I think it's a very good question too, that also leads to the previous that we were doing before. So, how to transition from a back tester to an actual trader?
Okay. I think that is actually a jump that a lot of people struggle with. And I like that the question is phrased knowing what the process is. You should always be an analyst and a backtester first, because that is building your foundations, that is building your systems, plan, confidence, to then jump to going from analyst to a trader. And this is the systems we believe in of backtesting, stress testing, and then applying. So if you want to touch upon that a little bit.
Yeah, so I think the first point that we need to understand is the first step is, first of all, understand price action, at least to a basic step. Okay, of course, depending on what's your journey, but basic step of price action. After understanding price action, you need to have some sort of plan. As you were mentioning before, you might be doing a win a trade, but that trade might not be following a plan. So in a long term,
there's no longevity.
there's no longevity. It's not going to play out, or you're not going to be successful with it. So at least you have some sort of strategy that plays more or less objectively. Okay, I say more or less because depending on your strategy might be better or worse, but at least have some sort of plan that you can check and say, okay, this is happening in the market, this is the reasons why I'm entering, and then you can journal that and keep tweaking it and keep improving.
I think in that sense, the best traders usually have models. They know what this type of trade is. This is a pro trend or counter trend, or you have different categories or trade models that that, okay, this type of trade is an accumulation based trade. Okay, what are my criteria for an accumulation based trade? Okay, this one didn't fit all the criteria, I sit it out. Or this one is, out of my 10 points, it's fitting 9 of this trade type. Okay, this is a good trade. So first of all, is having your models and plans in place. And again, I'm going to be a bit scientific because I think that's how my mind is. But when it comes to a controlled experiment or any scientific experiment, this is going from the scientific community. You can't just have mixed variables. You can't just do an experiment and say, what is the effect of smoking? And then you have people who are also obese and have diabetes and whatever, because if they have comorbidities, you don't know what caused their death. Let's say, was it the smoking or was it the obesity? So when it comes to now you have a plan, it works in theory. Now let me stress test it. That means kind of you're putting it in action. Let's see if it works. And that is usually through a demo account where you're changing one variable. Because if you start saying, okay, I'm going to trade M5 and H1, and I'm going to trade Asia session and London session, and I'm going to trade pro trend and counter trend. Let's say your win rate is 50%. Where are those losses coming from? Was it the H4 trend trades, or was it the counter trend? It's a mix. So therefore, what you need to do is have a baseline system that you kind of have built up. And you say, okay, let me introduce this thing I've been working on. This, I like trading M1 and I like trading, let's say, runs of liquidity. Okay, let me see if this works. Let me see if there's any validity to this in a controlled environment and with time. It's not just 1 or 2 trades, but you give it a month and you only change that one variable, and then you see the outcome. And you have your control, which is your general trading plan. And you see, did introducing this thing improve or worsen my system. And that is the stress testing process. And now if you're being very selective with anything you introduce into your plan, again, think of your trading plan as something holy or something sacred. If you're introducing something foreign into that, you better be sure that it is worth it. And you don't know the domino effect of adding 5 random things. So you be sure this one works, let me add it in. This is now my new control. Let me test this new thing. Has that improved against my control? No? Okay, remove that. And you're going very scientifically like that. And with time, you're going to develop something that is more or less airtight.
Yeah, and that has to be as a minimum of 100 trades.
Yeah.
A minimum. A lot of people, and I include myself when I started, you try one thing, you get excited, and then you are randomly, oh, this works, oh, this is my new strategy, whatever. And that has to be something of a minimum of maybe 6 months. If you're, depending on your trading plan, because if you're more a
depending
swing
on your
trader,
patience too, and how committed you are, but the longer the better.
Yeah, because if you're a swing trader, you might be doing like 4 trades in 6 months. So if you do like 100 trades, might take you 4 years. So maybe you can do 6 months if you're more of a swing trader. You are more of an intraday trader. Maybe do it on 100 trades that you journal. And as you were mentioning, don't add things that you don't think are gonna better your strategy. Actually test things on 100 trades period, and then say, okay, this is valid. This is improving my win rate. This is improving my risk to reward, or everything that is actually helping them.
What is your thoughts on, let's say you have those backtesting softwares, there's plenty, free ones as well, where there's simulators where they have recorded price action from, let's say, 2004. And you say, okay, let me test this new thing I'm working on. Let me backtest 2004 to 2007. Okay, you're a swing trader, but you got 3 years worth of data and you execute that plan on, let's say, GU. Do you think that is a worthwhile process, going back a few years to model a system or see if it's efficacy?
If you go back too many years, maybe not. What I personally was doing is the first thing that I do when I test things is I don't care that I can see the actual outcome. That will be like my first phase, long time ago. So no matter that I can see the actual outcome, I'm just testing things that when they come into this area, or they're doing this pattern, or they're doing this thing, actually plays out. So that's the first time that I build my journal. Once I have that, even though I knew the outcome, now I start doing without not knowing what price action does.
Okay.
So that was kind of my process. So first, even though I knew the outcome, let me build that pattern subconsciously.
It's the hindsight backtesting where you know the results and you're investigating.
Exactly.
And the other one is blind backtesting where you don't know the outcome, but now you're testing the theory. And I mean, I'm in full agreement that going back too far, I think the market is cyclical. Things change. As technology has changed, as algorithms have changed, as banks have developed different things, new participants coming in, the market conditions change very often. And I don't think things from 50 years ago are relevant at all. It was a different generation and a different time. So I think in that sense, our process has been, okay, something we're testing. Let me go back as far as I can on TradingView. On one pair, let's say GU allows me to go 30 days on M1, 60 days on M2, etc. Let me test out the last few months, the last quarter, see if there's anything valid there. And then the next thing I personally do is backtest it in a live scenario, or let's say journal on a demo account of actually trading it for a month and then doing it like that. So actually, I'm not too in a firm belief of going back years. And it's actually not something I've done since 2019. I haven't done it in a while.
One of my problems with this was I actually have very good memory when it comes to remember things. So the problem that I had when I had to play, let's say, the replay bar on TradingView is that if I go just 1 month, 2 months, I'm cheating because I put so many hours like yourself into backtesting, into trading, into watching the live sessions that I know the price action almost on my head. So sometimes I just go 5 years ago to do that. But just even though I know the market is cyclical, just to test myself maybe on a different scenario, but
I think actually a big answer, because I know a lot of people do this backtesting on these simulators and things. I think one thing we have to realize is when you're trading, understanding what each intention of the market is, each move, there is an abundance of data. Like I exclusively trade EU and GU, more GU, and you're very similar. You only trade 1 or 2 pairs. And people are actually a bit shocked. They're like, how can you only trade EU and GU? And people are, even me and you too. 2 years ago, I was trading gold. I was trading EU, GU, EJ, CAD, JPY, 12 pairs. And okay, fine, you're being selective with the prime setups. So it's still effective. But I think there's so much power in knowing that there is a trade setup every single day, basically, on EU. Every single day, there's an opportunity. And you just need to have a plan in place. And in that sense, if you want to test a system, if you are now to do 30 days of price action, which goes down to the M1 on EU, there's maybe 20 trades there, and now another 20 on GU, another 20 on gold, another 20 on US 30. In that sense, in 1 month's price action, you can test the theory more than sufficiently. So in that sense, I think when it comes to people just trading solutions, if they're very swing trading based, again, if you're doing swing trading based on a higher time frame analysis in the sense of exclusively trading a weekly time frame and a weekly structure break and whatever, and you're doing, in 3 months you're doing a 1 to 5. I think that is, yes, you're a swing trader, but it also lacks knowledge and precision.
Yeah.
And I think everybody reaches a stage of understanding M1 is not noise, it's not fluff. There's actually real market intentions in there. And when you start to understand that, swing trading even changes, where you're doing precision-based entries, intraday or intra-session-based entries with alignment of a swing potential. And that's how we get the crazy 1 to 100 trades or whatever it may be. Okay, what else do we have in stock from this? Okay, so there was a question regarding Dubai, no? Which we can touch upon.
It was from Pablo de Alzaga. Okay. So basically the question is, why Dubai? What advantages offers for your job as opposed to Madrid? Did you guys thought of other options too?
Right. So there's the crass answer, the very upfront answer, and then there's layers to it. I think the primary reason or the primary driver for the move is obvious. And again, there might be certain mixed opinions of that, of fair taxation or whatever it may be. But I think we both paid our dues significantly in the last few years within our respective countries. But it gets to a point where, first of all, we are working in a space where everything is online. We are not geographically bound by anything. And others maybe don't have the luxury of, okay, I am a nurse and I work in a hospital and I have to go to this hospital. So I can't live in Thailand because my work is here. So in that sense, when you're geographically bound, you don't have the freedom. But the way we started to perceive it was, man, we're paying X amount of, let's say, rent of taxation to live in this country. And do I get the ROI? Do I see the benefits of paying this amount to have the amenities of, let's say, in the UK, the NHS, or all of these things that come with having a first world country? And it got to a point where, yes, there's a lot of pros and cons. Let's not go into the politics, but it got to a point where it didn't make sense, where we were not getting the benefit that we were paying for. And with the nature of our work, everything is online. It was like, okay, let's explore options. And then we started to speak to different people, and there was actually a lot of ideas of, you said Andorra, Ireland, Dubai. There's actually plenty of places you go to, but I think Dubai became the option or obvious option, where when we were speaking about Andorra initially, it was like, man, okay, if we move for taxes only, what about the quality of life where 6 months of the year you're in a ski in a mountain and you're very isolated
also
or whatever.
Trading hours. I think trading hours was a big one when looking into Ireland, we're looking into Andorra, we're looking into Luxembourg. All of these were kind of good places, but now when you look into climate, into trading
quality
hours,
of life,
like quality of life.
And now you look at it, okay, independent of that, would Dubai as a move make sense, irrespective of the taxation side? Definitely, because again, the line of work we are in, we're young, we're ambitious, we have entrepreneurial mindsets, we're very actively networking with people. We've tried to become the type of people want to network with, and that's another whole topic. But in that sense, Dubai hosts a lot of opportunity for us. And already we've been here not even a week, and we've met so many people. Again, a lot of influential, wealthy people on the yachts, or the fund person you met, etc. There's a lot of people in Dubai, and it becomes a hub. And I think Dubai specifically is, everybody comes that is an expat or a foreigner. I think expat is a glamorous way to say immigrant. But anyway, a lot of the foreigners that come to Dubai are usually coming for the same reason, which is I am ambitious, usually young, and I want to expand my horizons there. So everyone we've met, very unlikely that they are just a standard lawyer or they're just a standard accountant. Everyone here that we've at least brushed shoulders with is on a different path, and they're trying to do something greater with life. They have a lot more ambitions, and their mindsets align very well with us. So in that sense, I feel like it's a hub of people like us, like-minded individuals that are also new to the city, looking to collaborate, looking to share ideas, looking to network. And in that sense, it becomes a very positive environment.
That's something we've noticed, because if you go to places like Spain, like for example, Madrid, Barcelona, Valencia, people are kind of very close into their circle.
Every city has someone to network with. You have influential in every city, you have wealthy in every city. But in that sense, yeah, Dubai.
But people
Dubai
know, but usually people are like more close into their circle, and they're not very open to. For example, the other day we're having a drink in Dubai Mall, and then right on our next table, the guy was
I just said, "Hey man, I really like your watch.
and
It was a nice date." And next thing you know, a 2 hour
speaking
conversation.
for 2 hours. That
Yeah.
usually won't happen in Spanish.
It depends
cities.
how outgoing you are, but it wouldn't be that common.
It's not that common.
I mean, very, very unlikely in a restaurant you speak to the table next to you. I mean, maybe certain people do, but I feel like in Dubai, it's a very culture of, oh, you're new here? Me too. Or, oh, you live here how long? Or whatever. Or what do you do? And then it becomes, oh, I know this guy and connections and whatever.
The stat is like just 1% of the population that live in Dubai is from Dubai.
The Emirati.
Like, literally is of the 11 million, 1 million is actually Emirati, and the rest of them are all foreign. So it's
it's crazy as well. But I think in that sense, to answer the question of, first of all, it works really well because I got sick of the UK weather. Actually sick of it. And I went back. I was there last month, and sunset at 4 p.m. every day gray. I think after living in Spain for 5 years, weather became a thing. It affects my mood or whatever. So, okay, quality of life, Dubai seems better. Here is the safest place you could ever imagine. Everyone here tells us the same thing of, you are now, if somebody commits a crime, they will get caught 100%. People, and I've heard crazy stories of people leaving their laptops, or, people leaving their watches on the sunbed and going into the sea, and nothing ever happens. And another thing is, I've been told that everybody respects the leaders here or the royal family, because whatever they say happens. Look at their response to COVID, let's say, and without getting into that topic, the World Health Organization ranked UAE's response globally as #1. So it's a very organized, safe place, clean, all the amenities you need, a hub for business, a hub for meeting people. Trading hours are a luxury. London session, London open for us. In the UK, it's 8 a.m. Here it's midday. You wake up, you have your breakfast, you go to the sauna, you go to the gym, and you wake up refreshed. And then at midday, you start your day, do a couple of hours in London, then go to the pool or whatever it may be. You go to the gym, and then you come back for New York session. But your day is much more relaxed, calm. So I think in that sense, quality of life is a big thing. And I think in the end, we were moving for one reason and it became another, where I think irrespective, if the taxes were the same as, let's say, UK, Dubai would still be in our minds of, oh, but I did enjoy it there. And there's a lot of opportunity. Let me try for at least a year or two. And I think that's what this trip has taught us, that this is actually a great place to be. Maybe long term for a family, maybe it's a different story. But for now at our age, it's worth taking the risk and seeing what happens.
Yeah, 100%. I agree on that one. Plus, same with me, you with the UK. When I was living in the US, I lived for 3 years in Cleveland. It's minus 15 degrees. It's cold. I'm never living in a
Spanish boy in the snow.
Exactly.
It's not a thing.
So I wanted to live in Spain at least, but then after that, tax and everything, not everything, but also the opportunities that brings coming into Dubai. Even though I was a bit hesitant coming in here at the beginning. I think end up being like
it's a daunting move, right? You're coming hours, a different continent, different culture, different part of the world that you've never been to. And you think, okay, when I was in Madrid and my family's in Valencia, I'm an hour or 2 hours away or whatever. Now you're a whole day's travel, whatever. So in that sense, it can feel daunting. But once you get here and you see everyone's opening
I
and
already
welcome,
live far from my family.
You didn't want to do it again.
It was like already 4 years. I'm thinking like, I just came for a year and I have to leave again for our business for the next 3 years.
I mean, you have to think as well, we're never going to do this in our 40s. If you have a family, if you have things settled, you have a base, you're not going to be willing to take the risk. But this is also, 100%. Man, you have to be, that seek discomfort. You have to be in a stage where you're taking risks, because you never know what doors will open. You never know what opportunities will present. And worst case scenario, you have a terrible 6 months, you go back.
Oh, no. That was literally the reason why we took the step. Because we're young, because we know this is the moment to do things. This is the moment to network with the right people.
Post-COVID, Dubai is booming.
It's booming.
Absolutely booming, yeah.
Trading hours are perfect. We can go to the gym even before actually London session, which is at 12. So, yeah.
To be honest, I think most people in our position, or who have the luxury of not being geographically bound, or are actually full-time within their trading, I think most people would like to move here. I actually don't see too many negatives. So in that sense, I think, we're both excited, and we'll kind of see where it takes us.
Yeah, 100%. So this was the second episode. Hopefully,
should we cut it here? Okay. If you want to wrap it up, I'll let you do it this time.
Oh, perfect. Yeah. So this was the second episode, guys. Hopefully you guys enjoyed it. Again, let us know on DMs if you guys want us to talk about all the topics, and we'll see you in the next one.
See you in the next one, guys.